I want to send a quick shout out to my friends at the Tampa Bay Lightning and Benchmark International Arena for their wonderful hospitality. Last week, we had our annual appreciation event at the arena. We had several hundred of our past clients, friends, family members, and team members at the arena. Had a great time. It was a little bit different this year. This is the first year we didn't have the actual ice because we planned the event around having the ice, but it was expected that the Lightning would go further in the playoffs and did not, so we had to kind of pivot. Our clients actually got to do locker room tours, which I thought was really cool. The neat experience overall to kind of walk through the locker room and kind of envision and see and kind of hear the history from the player side, as well as some of the concerts and different things that happen in the arena kind of behind the scenes. We had a bunch of like street hockey. We had a bounce house. We had, basketball, baseball pitching, football throwing for the kids. And it was overall just an exceptional event. Was super grateful to share the event with a lot of our favorite people, with our past clients, friends, and family. So thank you to the Lightning for over 10 years. I think we're bouncing off of 12 or 13 years now of partnership, my real estate team. So it's been a wonderful ride, and they did a great job hosting all of our people. So from the start today, I want to talk about the Tampa real estate statistics. Now, it's interesting because I've talked about this on the show a lot. If you're a regular listener, there is this dynamic going on right now within real estate where our real estate market, as well as the real estate market nationally, as well as segments of our local real estate market, are not performing the same. So I want to start with this understanding that real estate is hyper-local. So when you hear statistics from CNN, CNBC, Fox News, they're skewed on a national level. They may say housing starts are down, or pending sales are up, or pending sales are down. That doesn't necessarily translate to a local market. Like I heard things like, prices were depressed and, the market was, struggling to turn the corner. And that's actually not what the statistics say is happening here in Tampa Bay. So when you do see, people on the news or Case-Shiller data or national real estate stats, it can be very misleading. It would be similar to saying it's raining in the United States of America today. It's clearly not raining everywhere. It's raining in part of the country. And that's the same thing with the stats. You have to go really, really local to understand what's going on. And if you want to know exactly what's going on in your neighborhood, the only way to do that I can recommend is go to duncanduo.com. You can give us your address, and it actually gives you a snapshot of what's going on in your neighborhood. You get a home value estimate. You can actually request from our dashboard a cash offer, communicate with our agents, set an appointment, add upgrades to your house so our automated valuation system can improve the value of your home. A much more interactive version that I think exists publicly online, but you can do that again at duncanduo.com. If you're the nosy neighbor, you want to know if one of your neighbors is in foreclosure, if you want to know what they sold their house for, you can do all of that. And then you can get a snapshot of what's actually happening in your neighborhood. Is your neighborhood appreciating? Is it depreciating? Is it a buyer's market? Is it a seller's market? The data is there for you. We use a lot of different data sources as well as AI to blend and give you what we think is the most accurate home value estimate in Tampa Bay. Again, you can do that at duncanduo.com. So let me talk about the Tampa stats. And again, I want to preface this by saying what I just said a minute ago, that, just like the national stats don't cover everyone, the Tampa stats don't either. So when I talk about this, your neighborhood, it something completely different may be happening. Your neighborhood may be doing great, or it may not be doing great. So, when I talk about these stats, don't take them, take them with a grain of salt. Don't take them as pure fact that that's exactly what's happening in your neighborhood. It's what's happening in the market overall, blended across millions of people and, lots of homes, and to come up with the figures that we're seeing as trends. So the first trend I want to talk about is we had 4,889 home sales in our market in May. That compares to 4,571 last year. That's an increase of about 7%. So year over year, a 7% increase in the number of home sales. Now, this is despite still having really high interest rates comparatively to what we had maybe 5 years ago. Historically, though, our interest rates are actually pretty normal. We just are comparing them to this historically low time during COVID when money was being printed and rates were drastically low. So now we're seeing an increase in home sales. The next thing that I want to share with you is our average sale price of $509,951. To put this into perspective, last year in May, our average sale price was $482,953. Now, that's an increase of a little less than 6%. Okay. So we're seeing year over year appreciation that is outpacing inflation. Okay. Because 6% is, a higher figure than what the stats tell us inflation is. And we're seeing a 7% year over year increase in home sales. The next thing I want to talk to you about is the state of the market. For the first time in 6 months, we saw our average days on market dip below 80. That means demand is strong. Demand is strong for Tampa Bay, despite still what many people perceive as higher rates, and despite maybe what's happening in other parts of the country where the real estate market isn't performing as well. We're also at 3.97 months supply of inventory. To put that into perspective, the last time we had below 4 months of inventory was July of 2024, so almost 2 years ago. Below 4 months of inventory is a balanced seller's market. So it's definitely tilted in favor of the sellers. We're starting to see, bidding war type situations. We're starting to see, homes that are priced well, moving fast in certain neighborhoods. Then there are neighborhoods in Tampa Bay that aren't performing as well. So I want to break that down for you and give you kind of an idea of the segments and properties that aren't performing as well, and then ones that are performing even better. The first segment of the market not performing well is going to be condos and townhomes. So condos and townhomes are performing worse than single family homes, and more so condos. Townhomes are closer to single family homes, but single family homes are outperforming as far as an asset class, the condos drastically, and slightly the townhomes. So single family homes performing better. Homes being sold in communities that are newer, where builders are still building or builders are still building close by, are struggling. They're struggling because those builders have deeper pockets, can sell homes today for less than they were a year or two ago, and offer incentives that the regular homeowner can't offer. So a lot of our customers that bought 21, 22, 23, and are in a community where that is still being built, there's many of those that are not in an equity position, that are negative, and either need to do a short sale to sell, or they have to wait until the market recovers because the market isn't supporting and it won't appraise, and buyers aren't going to buy their $300,000 house for $350,000 when they can go down the street, buy it from the builder, and better incentives. Because the builders are offering incredible incentives. They're offering interest rate buy downs, free upgrades, aggressive pricing, because they need to move inventory. They're more motivated than you, and they have more resources than you, the individual homeowner. So you have to compete with that. So your price has to be very aggressive, and you've got to consider offering some of those same incentives. Other areas that are struggling to perform, I mentioned, multifamily, for example. Some of the areas that are not considered luxury, but are in, commonly flooded areas that are not luxury homes. So the $500,000 and $600,000 and $700,000 houses, don't consider those luxury in areas close to the beach and close to the water. Some of those are struggling because the insurance costs, the fear of a storm, especially someone that's buying on a budget. Now, where is the market really outperforming? Luxury. We just saw a statistic not long ago that said over a 3 or 4 month period that Tampa Bay's luxury homes increased by 17% in their average sale price. That means we're seeing higher priced homes, more wealthy people moving here because of some of the tax policies in New York and California and some of the other states, as well as people expediting their retirement, people liking our politics, people liking the fact that we don't have state income tax. All of these things are driving people here. What's happening, especially, in areas like Tampa and Miami, is that you have a lot of these people from California that are bringing their companies here. And then that's moving people behind them. That's moving the executives that can work from home. That's moving the owners and the entrepreneurs that travel all over the country anyway and don't sit in an office every day. It's those people are moving because of some of the tax policies and the wealth tax policies being discussed in many states. Those are areas where the market is outperforming. You also got the typical hot spots. South Tampa is doing incredibly well. Luxury. When I talk about the waterfront, like I said, the kind of the entry-level waterfront stuff, not doing as great or close to the water. The higher-end waterfront stuff doing incredibly well. Golf course communities doing incredibly well. Homes below 500 aren't performing as well as homes above $1 million, for example, in some segments. And that's simply because of the interest rate. The person buying $1 million or $2 million or even $3 million home isn't as interest rate conscious as the person buying the 500. So that's kind of the overall take on the market right now. It is looking pretty optimistic. The Federal Reserve met and had their meeting this week and indicated that we're not going to see a drop in interest rates anytime soon. So if you've been waiting on that, you're going to keep waiting for a while. It's not happening anytime soon. And if we continue on this path towards getting people relocating here, they're okay with the rates that they're paying cash, and we have lower inventory than we've had, and we have lower month supply inventory. We're pushing forward on increase in home sales, pushing forward on increase in sales price. That savings that you think that you're going to save by waiting, interest rates improve, you're going to wait a long time and the prices are going to go up more than what you think you're going to save in interest rates. So if you can't afford a home right now, I strongly recommend it. I have multiple high net worth clients this week call me and say, I want to buy more property because I see what's coming and I think it's a safe place to buy an investment property and invest in the upper end of the market right now because of what's going to come a year and two down the line. Because if we're seeing housing improve right now with interest rates where they are, we've got property tax legislation that's coming that's going to very likely improve our prices and move people here. And a lot of people are a lot more bullish now that eventually we're going to see some interest rate cuts. Probably not this year. Maybe one this year. I think it probably pushes into 27 now, but I believe they're going to run it hot, and I believe we're going to get interest rate cuts. And I think a lot of people are wanting to position ahead of both the change in property taxes and the potential interest rate cuts because we know people buy on payment. When payments drop, prices rise. So if you wait for interest rates to drop, you're not going to save anything because prices are going to go up faster and you're going to pay more for the house. So that's my take on it for people waiting on the sideline. That's my analysis of what's going on in the Tampa Bay real estate market right now. And again, if you want to know what's going on in your neighborhood, just head over to duncanduo.com.